So the first one I want to talk about is hard money lending. Hard money lenders, the reason why they use that term is because they lend on hard assets. So a lot of times when I first heard the term hard money lending, I was like, man, what does that sound like? Are they loan sharks or something? But that just means they lend on hard assets, and they have to be. It's actually a lending term. They have to be licensed as a hard money lender in whatever state they're doing it in. And some hard money lenders, there's big ones now that you could use one lender, and they might be in 25 or 30 or 40 states. And so there's big lenders now that will lend in multiple areas, but they're going to lend on a hard asset. Well, what's a hard asset? Well, obviously, real estate is a great example of a hard asset. So they're going to look more at the asset than you, and they generally only lend to businesses. So somehow that skipped right past it. They generally only lend to businesses, and so it's one example though. Like I have hard money lenders on fix and flip loans. They'll lend up to 90% of the purchase, sometimes up to 100, and 100% of the rehab. So if you're buying a property on market, you might have to only come up with a little bit of capital. I also have hard money lenders that will lend just on the construction loans post auction. So there's so many things we can look at from that perspective, but it can definitely help you scale up your business because you're not using all of your cash on one property. And generally, when I'm talking about hard money lenders, for those of you guys starting out with that as a potential strategy, I would say use the bigger hard money lenders, the national ones like Kiavi, Castilli, Complete Lending, Center Street, Castle, some of these other ones. And what they're doing is they're lending on the property because real estate has its own value. So they're not doing as much based on you. You can even have a relatively lower credit score. I have hard money lenders that lend as low as 600 credit scores. And it's not really based on you, it's based on the deal. So if you have a good deal, I'll tell you right now, if you have a good real estate deal, getting it financed is the easy part these days. And so typically what they're going to charge you is points and interest on that loan. So for like a fix and flip loan, it's typically only going to be a 12-month, at most a 2-year type loan, because you're obviously going to fix it up and sell it. And so those loans, 10 years ago, those loans would have cost you 15% and a few points. Now it's more like 8 to 10% and 2 3 points as far as the lending goes. So here's some examples of some of these, like Center Street, Zine, Kiavi, Complete Lending. There's a whole bunch of other ones. But I have hard money lenders that if you actively are doing fix and flips, if you've done 10 fix and flips in 2 years, I have some lenders that will give you essentially a line of credit. They'll give you a $5 million credit facility to go and pick up more, a $5 million line of credit. And so hard money lending is one huge resource that it's one of those things. It's like it's better to have it and not need it than need it and not have it. And it's better to be able to have more options available or how to put together the deal. Because the more options, opportunities, and solutions you have, the more deals you can do across the board.